Banks have mastered the art of marketing, one of the biggest financial illusions ever. They've convinced us that money parked in a savings account is growing over time. But the harsh truth, it's not. While your account balance may increase in number due to interest, the real value of that money is shrinking right before your eyes. Inflation is climbing faster than your bank's interest. And with every passing day, your cash is becoming less and less powerful. In fact, keeping your money in the bank is like watching it slowly disappear. Now, imagine this. What if you could protect your hard earned money from the invisible erosion? What if, instead of watching your wealth shrink, you could make it grow? Not just for you, but for generations to come. Stick around, because in this video, I'm going to share with you 6 assets that not only safeguard your money from inflation, but help you build long-lasting wealth. And trust me, you don't want to miss this, because they might just be the key to changing your financial future forever. Let's start with something timeless. Have you ever wondered why people refer to gold as God's money? It's because, for centuries, it's been a reliable store of value, but in today's world, where governments are printing money like there is no tomorrow, the value of the dollar is on a shaky ground. There is a very real risk that those green bills in your pocket could one day be worth little more than the paper they are printed on. This is why the wealthy have always leaned on precious metals like gold, silver, and platinum to secure their fortunes. They are scarce, can't be manufactured, and hold their value when inflation goes through the roof. Gold, for instance, was trading at around $400 an ounce in the 1950s. Fast forward to 2023, it's sitting at a comfortable $2,000 an ounce. That's five-fold increase, and some experts believe it could go as high as $10,000 by 2032. Think about that for a moment. While your cash could be shrinking, your investment in gold could multiply 5 times in just a decade. But here's the good news. You don't need a vault full of gold bars to get started. You can invest in gold ETFs, which allow you to track the price of gold without having to physically own it. It's a much more affordable and convenient way to hedge against inflation. While gold and silver are the classic examples, there's another class of assets that's rapidly gaining value: industrial commodities. These are the raw materials that make the modern world run: metals like cobalt and nickel, as well as copper. They, are, they aren't just valuable because they are hard to come by. They are indispensable in industries ranging from electronics to electric vehicles. Take cobalt, for example. In 2012, it was trading at around $20,000 per ton. By 2022, that figure had doubled to $40,000, and the demand is only increasing, driven by the rise of electric vehicles that rely on cobalt for their batteries. If you can gain exposure to these types of raw materials, you'll be sitting on a gold mine. But here's the challenge. Not many of us have the ability to buy and store tons of cobalt or nickel. That's where investing in mining companies or commodity-related ETFs comes in. These options let you benefit from the rising demand for these crucial materials without having to figure out where to stash a ton of copper. With the geopolitical tensions on the rise and the global economy on shaky ground, cash is no longer the safe bet it once was. But did you know there are currencies out there that act as safe havens during economic turmoil? One of the most notable is the Swiss franc. Switzerland has long been known for its political stability and robust economy, making its currency a go-to during times of crisis. History has shown us that when things go wrong, the wealthy move their assets to Swiss banks. During the global financial meltdown in 2008, and again during the Eurozone debt crisis, fans flocked to Switzerland. And in the wake of the Russia-Ukraine conflict, The demand for Swiss francs surged as international sanctions forced countries like Russia to trade using Swiss francs instead of the dollar. In 2023, one Swiss franc was worth over 1.10 US dollars, significantly increasing the wealth of those holding this currency. While opening a Swiss bank account may seem like a pipe dream, there are more accessible options available. Currency ETFs or even online forex brokers can provide you with exposure to stable currencies like the Swiss franc, the British pound, or even the Chinese yuan, often for as little as $100. Here's something you may not have thought about. Your money is only as strong as the government backing it. When the US moved away from the gold standard in 1971, the dollar became what's called a fiat currency. Its value is supported by nothing more than the full faith and credit of the US government. What does that mean for you? It means that while no currency is without risk, investing in a government-backed asset is one of the safest places to put your money. Governments are the last entities to default, and in the rare case that one does, the entire system collapses. That's why investments in government securities like treasury bills, notes, and bonds are seen as much safer than keeping money in a bank. You can easily purchase these through online platforms or directly from the government. And while the returns may not be sky high, they offer more protection than cash in a savings account, especially when inflation is eating away at your purchasing power. Now, government bonds are great for safety, but let's be real, most of us want better returns. That's where value stocks come into play. These aren't the high-flying tech stocks. These aren't the high-flying tech stocks that can double or crash overnight. Instead, value stocks represent established companies with a strong track record and steady demand for their products. Think of companies like Nucor, which is involved in industrial metals. Their business is steady and they reward to investors with both price appreciation and dividends. But here's the catch. Picking the right stocks can be time-consuming and tricky. That's why many investors opt for the dividend-focused mutual funds, which spread your risk across multiple value stocks while still offering the potential for steady growth and income. Here's a simple fact. The world's population is growing and land isn't. That's why land and real estate have been one of the most reliable assets throughout history. Whether it's residential homes, commercial spaces, or raw land, real estate consistently holds its value, even during periods of economic downturn. And the best part, you don't need to wait until you're 40 to start investing in real estate. Real estate investment trusts allow you to buy into the property market with far less capital than it would take to buy a house or commercial building. Plus, you get the benefits of real estate, appreciation, and rental income without the hassles of being a landlord. Finally, let's talk about something a little different: collectibles. Whether it's vintage cars, rare art, or even comic books, certain items increase in value over time. In 2022, a 1955 Mercedes-Benz sold for an incredible 135 million euros. Why? Because it's rare and there will never be another one like it. For the average investor, owning a piece of art or a classic car might seem out of reach, but platforms like Masterworks are changing the game, allowing you to buy fractional shares in high-value collectibles. So, there you have it, 6 assets that are far better than keeping your cash in the bank. The question is, are you ready to protect your wealth and start building for the future? If you found value in this video, make sure you like and subscribe for more strategies that can transform your financial journey. And remember, it's not about how much you make, it's about how much you keep and grow. Don't let inflation steal your wealth. Take control today.